Hello too. This is the DLA market for today, April 24th. It's about 2:35 and the markets will be closing in about 25 more minutes. And I wanted to show you what the chart for DIA, our trades, look like at the beginning of the morning. That yellow line here represents the market opening for the new day. As you can see, it kind of gapped way up. So I didn't do anything and just watched the trade for a while, and then I kind of went to bed. This was about the time I went to bed. Market kept doing this thing, and I woke up maybe about this time here and saw that the market had made a massive sell-off. So at this point, I start watching it and looking for signs of it turning around. And we're looking, basically the time frame is each bar represents 5 minutes of the day. So I kept watching and watching. This blue line is the 8-day exponential moving average. And as long as it stays below that consistently, we're in a downward trend. What I'm looking for is for it to rise above it and stay above it for a consistent period. So as the day went on, I noticed, let's span this out a little bit, this was the first indication of it going up. Or at about this time here, which was about 2:16, I got into a trade myself. And I bought calls, spreads. I believe I put in position for 241, 246, what they call bull call spread. It's called a bull call spread because a bullish market is an uptrend, and I'm using calls. So a few minutes, about 5 minutes later, I put your order in. This second line, I saw another pullback and was wondering how far it was going to pull back. So I used this tool here to measure from the low to the high. And usually it will pull back and bounce off one of these retracement levels. Fortunately, I can't expand this out any further than what it is. Well, let me see. There you go. And what it did, it bounced off to 61.8. And then kind of went up a little bit. If you notice, the MACD started to cross over. The blue line crossed above the red trigger line, and that tells me that there was potentially a bullish, new bullish trend in place. So I had to watch it further. It kicked back further down here, which I wasn't too worried about as long as it did not break that low. It didn't break that low. And again, I doubled another position because I mistakenly put in one single contract spread, and I meant to put in 4. I think I put in 3 for you here, and then here I went back to put in another 4 contracts on the spread. And since that time, the market has been continually going up. But you'll have these pullbacks, and each pullback I look kind of get a feel for where it could pull back to and bounce off. I could either use the most recent low here or the most significant low back here, and using that significant low and the most significant high, it's basically pulling back to the 50%. As you can see, the candlestick is moving. The market is still open live, so we are definitely off the bottom, the low for the day, and we're in an upward trend. See if I can get another tool here. So this basically is the trade that's in place and the price performance. So I'm looking for it to probably hold that line that bottom line and bounce off again. But we're in 20 minutes to the market close. I'm going to end this right now, and then we'll check back later. As you can see, it is now look like it's bouncing off. I'll pause this video and come back later. Hello, we're in the last 1 minute of the trading day. This bar here is where I left off, and the red candle was sitting right at the this trend line that I drew throughout the day, throughout that 5 minutes, I should say. It went all the way up to the high, went back down to the low and touched the 168, and it bounced off that. Then you had the next 5 minutes, you had this massive move up. As you can see, this bar is still moving. We're, like I said, in the last minute of the trading day. The only way you could get a massive bar like that is institutional buying. The big hedge funds like Goldman Sachs, Wells Fargo. As you can see, these big bars, the institutions were forcing this down. Any green bars were very small in comparison to these larger red bars. It wasn't until here that we started getting some sizable green bars, but then the hedge funds, the big institutions, smacked it back down again over the next 5, 10, 15 minutes. Then you had this massive, first massive upward where it took out this green bar, and it didn't look back for about another half hour. You had that retracement back to the 168. 61.8, and it bounced off there. A massive run up by the institutions, and then the last 5-10 minutes, and the markets are now closed. It looks like this pattern is forming a zigzag, and we talked about that once before. And if this is a zigzag pattern, then what I expect to see is this recent high run up that we had. Basically, if I take that bar and move it to that low here, we can expect the price of DIA to hit that line there. It's basically already almost, it's just short of taking out that high. On this period here, the high was 240.22, and the high here was 240.20. So just 2 cents less than that high. So I'm looking for a continuation in this pattern, and I can reverse this. If I put 100% up there and 0% here at the bottom, move that out of the way so I can see the price clearly. Okay, there. You got 100% there. First target is a 138.2, and as you can see, that horizontal line that I drew by extending this up, they're very close. So I'm looking that we're going to get somewhere in 141 range within the next few days. So this is a trade that I just put on some more call spreads on DIA. If you have any questions, let me know.